Welcome to AM 605, real talk about how to prosper in challenging times. Featuring Vancouver's top realty, mortgage, and wealth advisors. Now, here are your hosts, Melissa Wu, Gary Chan, and Joe Tang.
Hello everybody, today is January the 17th. Welcome to another episode of AM 605. I'm Joe Tang.
I'm Melissa Wu.
I'm Gary Chan.
So in 3 days, Biden is moving into the White House and Trump is, I guess to some people, is finally leaving. Trump's definitely been obedient. He's been good. He hasn't done much recently. So that's a good sign for the markets. But more importantly, what are the markets going to be like when Biden moves in 3 days' time? So a lot of times when people are looking at different markets and deciding what to do, you got to first evaluate what's actually happening. And you got to look at what the government policies are. Because at the end of the day, if the government wants to do something, if they want to stimulate the economy, they want to stall an industry, they will get it done no matter what. So right now, at this very moment, as we can all see, is the government anywhere in the world, they want to stimulate growth.
Right.
So they're printing a bunch of money. They're lowering the interest rates to zero, if not negative. So we have we should see a very, very smooth market for the year 2021 because vaccine.
For recovery, right?
Exactly. So Biden moving in, so a couple of things that he's already mentioned. He wants to print $1.9 trillion.
Wow.
Right? It's not approved yet, but he wants to do that. Most of the money, he's going to be using it for individual households. So it's not going to big corporations, it's going to individual households, which means that the households have more spending power. So then they have a lot of money on their hands to go and buy cars, buy real estate, buy investments, buy whatever that it is that you want. So that's going to drive inflation higher, which then at some point in 2 to 3 years, we should see interest rates starting to move higher.
In 2 years?
Yes.
Because of the inflation, because of the injection of the money.
Exactly. And plus, Jerome Powell has also said they don't want to increase interest rates until 2023. And this past week, he did come out and say that he continues to keep that promise. So we expect that 2023 would be the earliest that they would increase rates. So it could be later. It could be 2024. It could be 2025. But that also means if inflation is moving higher, if interest rates are moving higher, then banks and insurance companies are going to do very, very well in the upcoming year to 2 years' time, which is an industry that we can take advantage of. So then another thing that Biden wants to do is inject capital into small and mid-sized firms. So as I was saying, they don't want to give any more money to the large corporations. So those are some of the companies that we can be focusing on in the upcoming year. Specifically, he wants to put emphasis on infrastructure, right? So anything that has like Honeywell, Caterpillar, those companies. EV. So EV meaning like
electric vehicle?
He is a strong supporter of electric vehicle, green energy.
Yeah, because he's going back, like he's opt back into the Paris, like the global climate change, right? He's opting back into that.
Yeah, he's going back into it. So he's supportive of the EV, but he's not necessarily saying I support the manufacturers. He's more supporting the supplying companies of the battery.
Oh, the supply chain.
Exactly. So lithium
batteries.
Exactly, which is the batteries that most of these, Tesla, NIO, Xpeng, like all of them use. Right? So
does anybody know if those batteries are recyclable?
They have, I believe it can be, but they have like a 5-year cycle, I believe.
So what happened with the Tesla big battery after?
I really don't know.
Can they service it or?
You have to switch it. You have to replace it.
You have to replace it, right?
Yeah, you have to spend, I think, less than, I want to say between $5,000 and $10,000 to replace the battery.
The battery is like for the top model is $100,000 difference in price.
Oh, really? What's the difference between the?
It's just like double the kilometers and like very fast.
Yeah, but to replace it, it's gonna cost you 10,000.
I think at least maybe 50,000 just for the battery.
Yeah, so that's why some people they prefer just to get rid of the car instead and just buy a new one. But lithium is what Biden wants to kind of put emphasis on, and renewable energy, again, green, solar power, green energy. That's something that he wants to focus on when he comes into power. So those are some of the industries that we should be focusing on going forward. So long story short, basically all these industries, as I've mentioned, they're not really tech related. Tech has done very, very well in 2020, but there's a huge discrepancy between tech industry and the non-tech industry, like banks, industrials, renewable energy. There's almost like a 40% difference. So you want, as an investor, you want to be buying these industries when they're undervalued, when they're on the bottom, when they haven't started moving up yet.
So is there like an index or group of stocks for these, like kind of this sector?
There is. So there's a lot of like index, like for example, there's ETFs that for banks. So you'll have like 10 or 20 different banks from US and Canada. But the problem with it is then you're investing into every single one of them.
It's kind of very spread out, right?
Exactly. It's very spread out. And it's also not every single bank is actually good in terms of performance. Let's be honest, right?
Yeah.
There's a reason why, I don't know, out of the big fives, there's the last two hanging out there.
I have another question about the ETFs.
Yes.
So, like for example, because I'm Canadian, if I want to buy the US market index, is there like a Canadian like ETF that's like indexing the US?
Yeah, there are.
So then I can buy like a stock that basically is like goes with the US like Dow Jones Industrial Average Index.
Yes.
So I can just buy the Canadian stock. So I don't have to exchange my money.
Yes.
So it stays Canadian, and then I will just ride the index.
Yeah, you can do that.
But does it still fluctuate because of the exchange rate? In a sense, yes.
Very little. They hedge it. But then because hedging is not 100% accurate. So then there's still going to be some like very small currency fluctuations.
What about the taxes? How does tax work? Like suppose I buy a whole bunch of US stocks, and then like when I sell them, is there some other tax?
So because Canada and US we have a tax treaty, so we only pay tax in one place, which is Canada.
Oh, okay.
If you aren't, then you have to pay double tax, US and let's say somewhere else that you're from. But because we're Canadian residents, we only have to pay only one place, which is in Canada. So that's why when we open accounts and stuff like that, we have to declare that we are Canadian residents. So then when they tax, then we don't have to pay two places.
Oh, right. Yeah.
So that's what I'm saying. Tech, I'm not saying it's not good. I'm just saying that we may not want to overly allocate too much in there because that was last year's trade. This year's trade is all about the reopening stocks, reopening industries, which they haven't started moving up yet. Which, like as I said, there's almost like that's 40% cheaper than the tech companies. So there's a lot of room for them.
So they have not rebounded.
They started a little bit, but nowhere close to
like where the checks were crazy.
Yes, like like Amazon or Facebook or Tesla, nothing like those guys yet, right? So that's why you want to be when you're investing, you want to look at the future opportunity. Where's the next trade versus what's done already, right? So I would say keep maybe 10 to 15% in tech, but the other and 10 to 15% in gold because of inflation.
Oh, and also another point is like before you mentioned like it's always anticipating what the market will do.
Yes.
It doesn't mean it will really perform that way, right? So we're just kind of like expecting it to perform.
We're expecting, obviously there's all these analysis we read, and then we look at different people's opinions, like from different from JP Morgan, Goldman Sachs, Morgan Stanley, and then basically if 4 out of the 5 of them are saying the same thing, then the chances of it happening nothing's guaranteed, but should be good. But the thing I always look at is actually what the government wants to do, because if the government wants to make the market grow, doesn't matter what we small
like we can just inject another trillion or a couple trillion.
Exactly. So if they want to make something happen or they want to block something from happening, they're the government. They have the power to do it, right? To give you an example, remember 08, 09 in the financial crisis. After that, they printed a lot of money, right? They printed a lot of money, and then 1 year after that, take a wild guess how much S&P 500 grew in 1 year from 09 to 2010.
Like 30%?
In 1 year, 53%.
Wow.
Just because they just printed money. And that's just the whole index, right? So while obviously there's some companies.
So we found the solution, did we?
We have
just buy the index.
You just buy the index for the next year?
Yes and no. If you're lazy, fine, go buy the index and earn the 50.
Another question is, okay, this is the reason I keep asking about index, because I was reading Tony Robbins' book. He said like 95% of the people or even more cannot beat the index.
Yeah.
So there's only very few people that are able to beat it. So it's not just, of course you want to watch what's happening to the market, like kind of actively manage kind of, but he said you just leave it there. I don't know.
There's, in that sentence, there's a lot of misconceptions as well. I'm not saying he's wrong, right? Because what he and a lot of other people are talking about is just talking about the upside. They don't talk about the downside. So, of course, if the market goes up, everybody's happy, and then you can start comparing who outperforms who. But on the downside, if you buy the index, if you bought the index last year when the pandemic hit, you lost 40% of your money.
But it came back, right, to that or not?
It kind of just broke even for last year. So that's why there's pros and cons with buying the index. Yes, you just follow the index, but the con is you're not protecting the downside. So people only focus on, the index made 53%, we underperform. I get it. But at the same time, you want to be, if the index lost 40%, I only lost 10%, I beat the index. So you want to look at both sides. Right? So as what I was saying is that, yes, you could just buy the index S&P 500 and earn 50% for the next year. That's one solution. But again, you're buying every single company that's in the index. There's 500 companies out there. 53% is only the average. That means there are some companies out there that did more than 53. So then you want to be, again, picking out those high.
We want to find the one that's more than 100%.
Okay.
Like Tesla. Tesla, what happened to, how many percent was Tesla grew?
It's insane though. It grew
crazy.
So much.
Why? I don't even understand. I mean, I drive a Tesla, but I don't get it.
It's a hype. And that's the danger. There's a danger of it. As Warren Buffett did say once, don't follow the herd and go in the opposite direction as the majority of the people. Because if everybody's telling you to do something, there's a bubble.
Yeah.
Right? So you want to do something that's different because you want to find something. You want to find areas where people are not really paying attention. Because then by the time you go in before they find it, that way, by the time they come in, you're already in it. So you're going to go in before they do.
Yeah.
Right? So then basically in 09 when they printed money, 1 year it did 53%. And then from 2010, so from 2009 to 2013, 4 years time, it grew 100%. So that's the index investing. So I'm just saying that if you just want to be lazy and do it that way, then that would be one solution. But again, follow what the government wants to do. They want to grow the economy. So it almost...
The index is going to go up 50% like it did back in 08, 09.
Well, even Goldman Sachs, they came out with a report, and JP Morgan, they all came out with a report. They expect the S&P 500 to go up to like 4,400. So that's almost like a 30% increase from where we are today. That's expected.
So it's not it's not the NASDAQ, it's the S&P, right? So switch from NASDAQ to S&P.
Exactly, because that's a very good point. Because NASDAQ is all technology companies.
Right.
They're saying that the NASDAQ outperformed last year, obvious reasons. This year it's going to be the other way around. NASDAQ will still have some gains, but it's not going to be as much as S&P or Dow Jones. Or what are the companies? So that's what I'm saying. The tech stuff is 2020. 2021 is about the reopening. Okay,
so say for example, like these three indexes, if you want to diversify your portfolio or like put in, like maybe buy like some index of this one, how would you split it?
First of all, I wouldn't do the index because like I said, you don't want to overly, because you're buying everything that is good and not good in the index.
Okay.
Right? So you want to pick up the good companies.
But what if somebody that doesn't know how to pick?
then the index would be the only way to go. I would say, like as I was saying, so if I were to do it, I would say, you know what, if I have to, then like maybe 15% in tech at most.
15 like at the NASDAQ, right?
Yeah, 15%, 10 to 15 in gold, and then the rest of it could be in Dow and S&P 500.
Like split, like 50-50? Or
yeah, you'd be
the
fine.
rest
50,
okay.
That would be the simplest way to go.
Yeah. Or they can hire you.
Yeah. that would be the best option, obviously.
Yes.
Because then you can pick out the company. Because not every single company in the index is good, right? Like look at BlackBerry, for example. It's in the TSX, but for the longest time it didn't perform.
Yeah.
Until recently. So
why are they in the index if they don't even perform? Like shouldn't they be like good companies?
Because years ago they used to be good.
They earned their way there, but then like now they just kind of dormant or not doing well.
Yeah, so from 2007, I think I want to say 2014, they did really well. So they're in the index, but after that they kind of died because of Apple, because of Samsung. They kept losing market share.
What happened to Sony?
Well, they're still around, but they just don't do phones anymore. But my point is that if you buy the TSX, BlackBerry is in there. And you may not want to be buying BlackBerry because, or at least in the last 3, 4, 5 years, because they didn't really perform.
Phone is still going up.
Sony's doing a bunch of.
What are they doing? Like TV. Are they still doing TV? Samsung is taking over all the TVs, isn't it?
But they do a lot.
I used to love to Sony, like Walkman and TVs.
They got a lot of movies, right? Sony Pictures.
Make movies? Oh.
Sony Pictures.
Oh.
Yeah. So they're not the
animation and all those.
They left the phone business. They left TV.
But I haven't even seen Sony TV in
They're
like.
there.
Oh, okay.
But they're very specific with. This one's for movie. More
Samsung TVs are good to use.
Yeah.
Like very reasonable price and easy to use.
So yeah, so I mean, all in all, so I would break it down. Because the thing is that tech is very, it's overly valued as a whole. And then when Biden comes in, he also mentioned something about he's not saying he will, but because the tech companies grew so much, they have so much power. So Biden doesn't want these companies to have so much power. Don't want them to become monopoly.
Right.
And control prices. So there's a chance that he may come in and put some regulations to control. Then that alone could potentially bring down the whole, not bring down, but have a pullback in the tech sector.
Yeah, because like artificial intelligence and technology, like basically they know everything about you. Whatever you talk about, like if I talk about something, suddenly I'll see an ad on my phone about that.
Yeah.
It's so crazy.
Well, this conversation is probably they're monitoring.
Yeah. Like and you know the smart speakers at home, like hey Google, hey Alexi, hey they probably know hear what you're doing. We don't have privacy anymore. We have to unwire.
Even Apple. Well, I'm saying there's a risk, right? Because it's overvalued, and then Biden may want to control and not let them monopolize.
They have so much money. They can probably do a lot of stuff too. Yeah.
Well, they could, but I'm just
Yeah, I agree with Biden to some regulation to just kind of.
Yeah, but imagine the market how it would react as soon as Biden was.
It always overreacts the market.
Exactly. So is this the best time to be going in? Probably not, because the tech industry is so high. Like as always, you want to be buying things on the dip, not necessarily on the high point. Same thing with Bitcoin. It's it keeps going higher and higher and higher. One, I don't understand it, so I won't invest in it. But two, if I had to invest into it, then it'll be when there's a pullback. Don't chase returns.
No, I'm afraid I lose the code and you will lose your money forever. That's so crazy.
There's an article sometimes.
Everybody lose their passwords. Imagine you lose the code, then you lost all your money.
Yeah, there's an article. There's an article someone made 3.2 million or something like that. He lost his password and he can get his money back.
Yeah, that's crazy. Then what happens to the money in cyberspace?
It's up there. It's in the air somewhere.
So crazy.
No one has access to it. It's very safe. No one has access to it, but then he can have access to it. So we'll see what happens. I mean, Biden's moving in on Wednesday. We'll see how that plays out. And then next week, we've talked about investments. Next week, we're going to be talking about mortgages and how to manage a mortgage portfolio in real estate.
Yes.
And then we'll have Gary talk about it.
I'm excited to hear it.
All right. Thanks, everyone, for tuning in. Until next time.
Okay.
Bye.
Bye.
If you enjoyed listening to the podcast, you have to check out AM 605 on Facebook, where it's all about real investment and financing strategies. Brought to you by Melissa Wu PREC, Gary Chan Mortgage Team, and Joe Tang Wealth and Investment.